All right, folks, welcome back. It's our weekend commentary for Dash Mentorship for May 6th, 2022. Going to be a short one. Try to get right to the point here today. Got a busy weekend. All right, so the daily US dollar. Okay, do some dynamic charting today, not the PowerPoint because I don't have time to be producing all that. So we have had a slightly higher high, running the relative equal highs here, and we'll look at that when we get into the lower time frames. But pretty much a consolidation week, nothing really transformational for price action. And we will do a look at the hourly chart here. Again, relative equal highs. We ran up on that at 2 o'clock in the morning. Broke down. And we do have a small little fair value gap in here, but it's Friday. I'm not going to go out on a limb and say it's going to move from here. I think we've pretty much seen the daily range for today and whatever's in play for the low and highs. That's probably going to remain in place. So we'll see what we get on the Sunday's gap opening. Hopefully we'll get some kind of a movement higher, come down, fill the gap. Now obviously we're hours away from closing, but what I'm saying is I'd like to see it gap opening on Sunday higher, fill the gap, and then run higher. I want to see that 104s traded to, just simply because that's one of the levels I called. So my OCD is kind of flaring for that. This area here is a little bit exposed in my mind. It's only till about here, and the reason why, because we have this single candle and this single candle here, because this is a balanced price range. So we could come down, upset the low here and here. That would be enough maybe to send it higher. I like the idea of that being potentially available and not really revisiting that 103 level. So in other words, we went down to it. Support and resistance folks are going to be seeing that as, I guess, a failed support, and then it rallied back above it. Hasn't really come back down to retest it. So I like the idea of it coming back below here, not hitting 103, but going down towards it and then sending it higher. That's the type of price action I'd like to see. But again, it's Friday and we're going into a new week on Sunday. So it's, long and short of it is I'm looking for, obviously, the higher prices on dollar. I want to see that continue. All right, Euro dollar daily chart. Okay, we had, again, consolidation weekend here. Downside objective, that 1.03403 level. I'm going to scrub on over here because we're in a live charting condition. Keep on scrubbing. All right, there is that old low. Okay, that's what I'm anchored to. You can see that is where I'm looking for price to go down to. I'm thinking maybe this is one of those instances where a bear flag is possibly accurate. I like the idea that folks are trying to pick the top on dollar, and you keep hearing, "Oh, the dollar's done. It's going to crash. It's going to this and that." The more they keep saying that, the higher the dollar's going to go. Okay, and it's the way it is. So we're looking for lower prices on euro, and I'll drop down into the hourly chart. We're in a range here, nothing exciting going on. So this is, again, why I'm kind of like leaning very hard and pressing very firmly on the individuals in this mentorship that are saying, why aren't you calling this or calling that, and why aren't you spending too much time in the Forex market? This folks right here, this is the visual aid that I'm going to point to. It's stagnant. It's not really moving around. So my attention is on what's moving, the stock indices. Okay, so nothing in here is terribly exciting. We did come back up into a small little fair value gap here. I'd like to see it roll lower and attack the sell side that's been building in here. So a lot of people are seeing this as support building. Higher time frame, I see continuation lower. We've taken buy side here. We broke down, rebalancing here, so I'd like to see it trade lower. And let's go into the 15-minute time frame. All right, so we have the 15-minute time frame back up into a bearish order block here. Notice it took the low first here, then rallied, and now it's basically stayed sideways in consolidation. I like the fact that we went 1, 2, 3 times up before breaking lower, coming back into a bearish breaker, then trading softer. Institutional order flow entry drill here, sells off. Buy side real clean. They've worked that level multiple times and back to the bearish order block. So I'm thinking, as long as we don't start to make a run above 1.06, this thing should remain heavy and go lower. Worst case scenario, it just continues to go sideways, staying in the range I showed you on the hourly chart. All right, cable, pound versus dollar is our daily chart. You can see we did, in fact, trade up into this imbalance, sold off aggressively yesterday, and went back through our old imbalance. And then we scrub back over here. I'll show you. That's that little buy side imbalance, sell side inefficiency right there. Okay, this candle right there. All right. And the old low is what I'm highlighting there. You can see it there. And if we continue lower with higher prices in dollar, we'll be looking for this low here. So I'm just going to create a copy of this line. There. And we'll make this level that's active. I like to go through and dim the levels that's already been traded. All right, so we're looking for this level near term, 1.22517, and then if we get acceleration on the downside, we can see that 1.20766 level. All right, what changes it? If we trade above this short-term high, it becomes a potential bullish breaker, and then we could maybe trade up in here, and that's assuming the dollar fails and starts to go lower. I don't see that yet. Okay, so we're favoring the discount level still. Watch the old imbalance here. It could trade up into that, maybe consequent encouragement, and sell off. All right, so here is the hourly chart. Really nice run up into the old imbalance and hammered it into a institutional order flow entry drill. Dropped it aggressively yesterday, very difficult time being a bull for cable, and then dropped it here and then consolidated the rest of the day. So it hasn't been doing too much intraday. As I mentioned, the big mover for the week was the FOMC and then the meltdown immediately the next day. So it makes the likelihood for like non-farm payroll, it's not going to be that, exciting. It doesn't mean that there isn't opportunities for you to study and do tape reading on non-farm payroll. It just means that the big run for the week really took place earlier with FOMC. So, non-farm payroll becomes like a moot point. All right, and you can see here the last 24 hours or so after the decline, really been just going sideways. Nothing exciting in here. Nothing in here that would make ICT say, I'm going to take a trade here. None of this is something I would have ever participated in, okay? And it's because we've already moved a lot on the downside, and the economic calendar. All right, here is the E-mini S&P June contract 2022, and it's non-farm payroll Friday's price action. So I did a liquidity drill teaching how folks can be better trained to observe and look at how the market will seek liquidity and how it will look to pair that liquidity with the opposing side. I outlined, obviously, in the recording. If you watch the minute and second mark, it was the whole entire screen like this here. You can see the time down here. I'm working with one chart. I'm typing out the things, and no, I didn't have 15 different other alternatives. Okay, I'm literally typing. I can't be in more than one place at one time. And the logic is, obviously, we know it's been bearish. It's been a big down move yesterday. So short holders are going to be having their stop loss orders trailed right above recent highs. So I gave the two buy side liquidity pools and the sell side liquidity pools respectively here. And near term buy side was here, and then the upper one would be over here. Near term sell side liquidity pool here, and then the lower one here. Right? I mentioned in the recording, just in the typing, it was a mute video. It didn't have any kind of talking. I recorded it real quick, saying it was going to run here first. That's what I felt. I thought that was likely to happen because of the rules that I teach you and I make available on YouTube. That run to that liquidity, then it breaks down, trades into a breaker, then makes a run for the sell side over here. Then comes right back up once more, takes out the intraday high here, back into consolidation. So I'm not interested, obviously, once it does that type of price action. Now, if it was not Friday, say it was, I don't know, Wednesday, I would be looking for it to run here. Now, it might do something squirrely and surprise and run up into there towards the close of the day. Or it may not do anything, just stay in this consolidation. But generally, you can see that the only real nice move was the initial run here, then down here. So I'm going to contrast this with the NASDAQ. It won't have the liquidity levels on it. You can do that for your own homework. But let's go over to NASDAQ and look at the difference between that and this. All right, here's the 15-minute time frame on the NASDAQ June contract 2022. And again, non-farm payroll Friday price action. Relative equal highs. Ran up on that ahead of the FOMC numbers release. They ran it here. Manipulation, power 3, breaks down. SIBI, rebalance, breaker, trades up into it, sells off, external range liquidity, sell side over here. Stretched out like this, it looks difficult to read, but when you know what you're looking for, zoomed in, not too much all the time, but here it makes sense because the narrative is we're consolidating and we're going to run on stops because we're ultimately bearish, and then it reaches for a deeper run on sell side liquidity. If you use the 5-minute chart for intraday swing trading, the run on buy side liquidity here, 8:30, employment numbers come out, short-term low, it breaks it. So where are the imbalances? We have the fair value gap here and here. So the entry should be here, but we allow for a stab up into, with volatility, up into the highermost fair value gap. You can do, like, say you're going to do 2 contracts, say you want to sell short. You can do one here and then offer a limit up here for the second one. Or if you're going to be doing like 5 contracts, you can do like 3 down here to guarantee you get the bulk of your position on, and then 2 in case it runs up in there. That's one way you can use that with a mentorship level perspective. I have a little bit of a breaker in here. Trades up into that as well. And sells off. And we can calibrate our objective using the intraday swing trading. And -1 on the 5-minute takes us right in here to 12,540 and a quarter. And the open on this candle comes in at just a quarter of a point. I know, 1.25 point higher than that. But we do sweep it there. So the bulk of the volume is being represented in the bodies. You can see how it trades back up and rather handsomely returns back to the imbalance here, then sells off, and then gets sloppy going into present market delivery. So initially, this is the run here. Now this is a power 3. We have the open. Try to draw this out where hopefully you can see it. So even though this is not the daily range in its entirety, you can look at, or at least view it like I'm trying to teach you to do it, where you'll see the open, high, low, close type formation. And I'm trying to just get the range low and high here. And then just ballparking it right there. So inside of this area, we're seeing it run up. Accumulation of what? Shorts. Manipulation, where more shorting takes place, and they get traders offside thinking it's going to go higher. Then it breaks down. They return back into the original area of accumulation. Distribution into the low of the session. Then it goes sloppy, and we don't care about any of this price action over here. We're focusing on just this bit of business here with this logic. Okay, so essentially this is the sweet spot of the day, and everything else is, I don't want to use this term and trip you up, but while none of this is technically noise, outside of this area, I would consider everything else non-essential price action. So we're looking for this type of setup here, and that would be a nice exercise to do tape reading and or demo, but not live trading on the non-farm payroll. Okay, each session, like the New York session, the London session, and then the entire daily range using London to London close, or I'm sorry, London open to London close, that idea for the full daily range, Power 3 is scalable. Okay, so that's what I'm representing here. I'm trying to show you that so that we can internalize what it is you're focusing on, and kind of like ignore all this over here and ignore all this over here. Who cares about all that? You're looking for that little part of price action that makes sense, that gives you the surgical strike to get in, get out, and know what you're doing and why you're doing it, and then being content with it. Even if it keeps moving in the direction you were in the trade, if you would have held on to it, you would have made more money. Who cares? Because you don't know that it was going to do that. Okay? So don't torture yourself with that. And many times you'll find that if you get out, or you're tape reading and you think, okay, this is where I would get out, and you mark that on your journal saying, okay, I paper traded a hypothetical entry around, I don't know, 12,860. Okay? And you're looking for a target of 12,560. That's 300 handles. Okay? So that's 300 times 20 bucks. That's a pretty good payday. So that would be per contract. So understanding that and knowing that you're looking to go in, do business, get paid, and go home, that's the focus. You want to create operating hours, business hours basically. And as a trader, we work banker's hours. We want to try to get in, do as little as we possibly can in terms of assuming risk, but have the most yield for our efforts. And it won't always do that, obviously. But if you work with that business model, going in, looking for things to engage in, and then once it delivers an opportunity for you to scale out a hypothetical profit, when your demo account or paper trading, that conditions you to look for that repeating phenomenon, and it rewards your diligence. So hopefully this has kind of like helped you in that idea in framing what we're looking for. This is not limited to non-farm payroll, so I'm kind of giving you the X-ray view, focusing just on this. This is what we're looking for, and that logic of running above an old high here, buying that on a breakout is what retail's thinking. We're looking for that run to go short in it, and it's completely diametrically opposed to street money, or what we commonly refer to as dumb money. So hopefully someone's been insightful. I hope you have a restful weekend. It's Mother's Day. I mentioned I was going to have well, it's not Mother's Day today, obviously, but this weekend's Mother's Day. And I mentioned I would have the charter member algorithmic theory, one of them posted up this week or something that I've had this weekend. My wife was away. I played Mr. Mom, Mr. Mentor, Mr. Dad, Mr. My own personal life, and I'm trying to get caught up with my wife's help now. Plus, it's Mother's Day weekend, so I will be working diligently next week to try to get caught up with all the algorithmic theory videos, because I have to close them out before the last week of this month. So I have a busy production month. And I have that missing piece of videos between, I think it was 2017, August or September, until I think it was January of 2018. You guys are missing that backlog of commentaries. You're probably going to see mixed user group watermarks in there, because some of the videos I don't have access to them. It's been messed up, so I'm going to do my best to put them back in where I can. And if I miss one or two, just be understanding that it was outside my control. It's not that I'm trying to hide anything from any of you. I'm quite certain that there are members in here that are in possession of them, and if I'm missing any of them and I have them, all you have to do is just make a thread in the forum. That way I'm being honest with you. If there's a video that I don't make available, but I believe that I have done my best in terms of filling in those gaps, just simply say, hey, look, you're missing this video from this date, and that might help me. If I don't have it, then I'm going to ask you to make it available for me to make to the public. Well, not the public, but the community here. Okay, so everyone has what they've been promised, and we can continue on with our carnival-like atmosphere here, just not doing so many videos, just producing the commentary and exchange of ideas in the forum. Okay, that's going to be it. Have a nice weekend. Be safe, and I'll touch base with you on Monday, Lord willing.